So on the Dow Jones, I think we got more lows coming. All right, and I think that's something that you are going to want to know in terms of, what should you do? And I do think we have more lows coming at some point. Now, in terms of a longer term aspect, we are getting some short entries on the longer term charts as well in the Dow. So I do think we're heading into a major correction at some point. All right, so let me open it up to questions. I mean, this is a webinar for you guys, not me. All right, so let's open that up and see what you got to say on that. And if you have no questions, we'll just call it quits early today. So this is your particular webinar. So whatever you want to talk about today is good. Psychology. All right, well, we can talk about psychology. Trading psychology is a good thing to talk about. I think basically you want to make sure you're not acting out of fear or greed when you make decisions in the marketplace. I think that's really important. I think it's very easy to say that. Another thing, when you're in the midst of a trade, to actually implement that. So I think that's really super important to have that trading psychology in hand. And basically what you want to do is if you're having trouble with that, we deal a lot with that on coaching, but you need to practice in a simulated environment until you get used to all the different scenarios that create those fear and greed trigger points that you may have. And we all have them, but the thing is to be aware of them and know when they surface. Are you scaling out or getting out of a trade based on fear or based on what your tools are telling you? And of course, you want to do it based on your tools for the most part. All right. So some people will say, well, I've got different ways in which I scale out. That's fine, as long as that's part of your overall edge in the markets. And you need to be able to apply that in and out of each and every type of trading environment. So that's one of the important aspects of trading. I mean, you can have the greatest trading system in the world, but if you can't implement it the way it's supposed to be implemented, then you're going to have trouble. Okay, so and psychology is usually the problem with that. All right, I know a lot of people, we have a couple people here from our day trading room, and psychology is much more intense when you're day trading, and you really can see how fear and greed pull you. Patrick, I know you're here as well, so I know you can back me up on that, because that's something we all feel, no matter how long we've been trading. So kind of important there. All right. The other thing I wanted to quickly go over is Kryptos. I'm going to talk about the ETFs on Kryptos because we have a lot of people trading those. And, we suggested a long position on Kryptos back in this area here when the market was moving up. Then it pulled back and the stop is at the very bottom. Now it's kind of meandering. So when you take a trade in the beginning, you always try to get in early. And our indicators did put us in at this time. We had green here at the time. We had green on the 60. So this was a good trade. But you have to put the stop at the very bottom of what you think the bottom is. And that is one of the advantages of getting in early on a trade. So when we talk about early entries, that's something you want to take advantage of when you can. It gives you a lot more options. If you get in late, then you're forced to put your stop maybe in the volatility zone, and therefore you get stopped out a lot more often than if you put it at the very, very bottom. So that's kind of important. All right, now you can certainly see that if you trailed your stop up here, you would probably be out based on this volatility. The nice thing about putting your stops at bottoms or key levels of support is that if you are stopped out, you want to be. You'd never want to be stopped out on just normal market volatility. You want to be stopped out when the market, the trade actually is no longer valid. Okay, that's really important. So in a situation like this, put your stop at the very bottom and also calculate your trade size. So if you get stopped out, you're not, losing your shirt. You're losing a very controlled amount. And that's the key to good trading. Now, on things like Bitcoin, there's a lot of news out there. There's people loving it, there's people hating it, and there's people in between. I don't care any about that. I don't care what they're saying. Anybody can say anything. The price is the only truth that we know of in the markets as technical traders. Price represents everything. It represents the smart money, the dumb money, and the in-between money. All right, so it is what it is. So we base our decisions on trade entries off price. Much better way to go than listening to some guy on the TV or some person on YouTube. All right, much better way to go. So you want to do it that way. And guess what? We're not always right, and neither are they. But when we're wrong, we lose a very calculated amount. A lot of times when people go into markets based off hearsay, they're betting the farm, and they're going to lose a fortune. And you don't want that to happen. You know, I've listened to some people say, well, you know, Bitcoin's terrible. You're going to lose, you know, your shirt. Well, no, you're not. Not if you do it properly, the way we do it with risk control and everything else. All right, so I'm getting some people can't hear me. I guess Patrick, are you okay now on this? You can hear me okay? I think you probably can, right? Everybody good now? I think probably the sound should be okay now. Good. Okay, great. All right, so keep that in mind. I think that's a very valuable lesson, and if you take anything away from this quick webinar today, that's a really important aspect. Anybody want to add anything on? Let me know, and we'll be glad to discuss that. But getting in early after a bottom or a top is achieved is really one of the things you're going to find to be a very significant improvement in your trading. You just kind of want to make sure you're pretty strict on how you identify a bottom. And of course, we do a lot of fib retracement calculations. We look at our OWL, our PTFs, and we look at the 3 different time frames. So all that's available for picking out the best possible bottom. So we go with a high probability bottom and then try to get in early. Okay? And if you miss it and you get stopped out, you may have another chance down the road. But you're not betting the farm. Okay? I think that's one of the key things you have to take away from this type of trading versus the way a lot of people just dump their money into things without thinking about the risk. All right, really important. So actually, at this time, if you're thinking about going into Bitcoin, if you're using our tools, all right, at this point here, you might want to wait until this turns green, okay? Things are looking much better than they were last week, or, you know, because it was coming down again. So now it's starting to perk up. So if you go long, I think you're in pretty good shape. Just put your stop at the very bottom. That's kind of the way I would play that. Now you have a green PTF over here on the far right-hand side. So that's putting a target range just based off the PTF smack in the fib wave 5 target zone. So if you're an Elliott wave person, that's 3, 4, 5. Okay, so I think those are probably pretty good ways of analyzing not only this particular trade, but any one. And you can do that on intraday time frames as well. So if we drop down to some intraday time frames, here's the micros on crude. Notice the beautiful short position. This is the 15-second time frame. Look at that. Boom. All right. This is the, boy, Patrick, good day today. 1 minute time frame. Boom. All right. And one of the nice things about this is when the trade was triggered here, okay, you go down here and you can see red all the way down. So you take that trade, put the stop up here, and now, you know, this could be a potential new stop based off the ART system. So this is a 1 minute time frame. So you can trade this on any time frame. This is the 5 minute time frame. Okay, stops clear down. Now, this is a great example of what I'm talking about psychology. So fear and greed in the markets, right? So if you were trading this, and Patrick, I know you can identify this as well as some of the others that are here. When markets sell off like this, the tendency is, oh boy, I got a gift, let's take it out. All right, okay, that may be a trigger to do that, but the tools are telling you to stay short. So you could put maybe a stop here at this pyramid. All right, you could wait for one of the PTFs to turn yellow before scaling out. But you kind of want to hold this short position because you still got a lot of red on this chart. So you don't want to leave the position entirely based off fear. Now you could scale out. You got a variety of signals. You could possibly take a third or a half if you had to, based off the R2B reversal, for example, based off this pyramid here, and things of that nature. So you have some spots where you could scale out and take advantage of what you perceive as the gift here. And we've done that. All right, we've done that quite a bit. In fact, you also had a 2B reversal you could have used down here. This was a 1B actually, down here. So you could have scaled out right there. So that's how you basically, go with the trend, and you use signals in the opposite direction generated by the art system for scaling out at certain times. But it's all rule-based. That's the difference. You're not trying to do it just off emotion. But it's hard, because when you get a gift in the market like this, what you immediately do is think about your last trade. Well, the last time the market gave me a gift, it reversed and went all the way up and I got stopped out. So I'm getting out down here. That's what people think. Instead, what I want you to do is follow your edge, which is your rule base. Okay. These tools are phenomenal for that. Because, for example, look, I've got a red PTF, and red PTF. Red, red. Now, we may get a short-term blip to the upside because this is starting to turn a little bullish, but the overall trend is still down. Okay, so do you want to stay with the overall trend, or do you want to take a quick scalp? It's up to you, okay? Do you want to get out when the PTFs go yellow? Well, if that's the case, then you need to hold this position until it backs down. This indicator has a 75% probability. So as long as you don't have your stop too close, then there's a darn good chance the markets after this rebound here will go back down. How big's the rebound going to be? Well, let's take a look and see. Looks like on this, we got an area where it sold off. So let's draw fibs retracements. And this is a 1 minute time frame. So, this is the kind of thing we can do. So we're already in the fib retracement target zone. So it could change at any time, but so far the 60-minute chart has a green owl, which is this indicator at the top right here. So we're still rebounding, and we have a MP pyramid. So that's indicating a rebound is in process. But the overall trend is still down. That's the key. Let's take a look at maybe some other markets here. Let's take a look at the MES and see what that's doing here. So that's trending up right now. Okay, here the pyramid's trending up. And after this sideways motion, you want to move back to the upside when it breaks out. And that pyramid caught it right there. Stop goes here, here. Now your stop would be here. So we trail our stops up under the pyramids. And again, this is a 1 minute time frame. This is a 5 minute time frame. So you have to choose the time frame you want to trade that's best based on your type of situation. Here's gold. Gold now is to the downside. Okay, it was to the upside. Now it's reversed and gone down. And getting a little bit of a rebound here because now we've got a green owl on the 15-second. So my point here is you can trade any time frame, any market, as long as you do it in a disciplined fashion. And that's what the art system's all about. Okay, so that's kind of the deal with that. But this is a great example because this one, now another scale out point could be the top of here. All right, so we give you options to scaling out, but doesn't mean you have to take it. And when you look at this, sometimes you shouldn't take it because it's still all red. So that's the kind of thing. David, I don't have TradeStation loaded. So the only thing I can look at for you, which I covered earlier, was GBTC. Okay, so let me know if you want me to look at that. Okay, let me go back to that. Give me a second here. So does everybody understand the situation with the psychology and how it can play a really important role in how you make your trading decision? And a lot of people will say, well, I follow my rules strict. Okay, well, if you follow your rules strict, you wouldn't be out at all in this. You'd be short. But then don't complain about being nervous or anxious, because you will be, I'm sure. Okay. So that's the kind of thing. Well, I'll just show you GBTC real quick. Let me go back over here to the longer time frames for you real quick. So it looks like it's starting to rebound again. David, whether you're trading the actual BTC USD or you're trading this, keep your stop at the bottom, okay? And hopefully you calculate a risk control and you're not going to get stopped out on the volatility that we've experienced with this, okay? So definitely take that into account. All right, anything else? Anything else? Oh, my pleasure, David. How many people out there do day trading? Pretty much active day trading out there. If you do, and you struggle with that, you ought to come to our day trading room. It's really a great place to really enhance your skills in being able to handle not only shorter time frames, but the actual fear and greed psychology that's generated during those times. Yeah, the fib stuff, we cover that in the, the Elliott wave course. That's where we cover the fib stuff. And basically it's using the Elliott wave to connect the various fibs. So that, we basically use wave 2 and 3 for the fib retracement, and then 2, 3, and then 4 for the extension. Okay, so that's kind of that. It's in there. But you see, when you do it that way, then these particular areas here have percentages based off the testing. So for example, 70% of the time, wave 5s will reach up into this area. 15% of the time they'll fail, and 15% of the time they'll even go a little higher. And it's the same thing for when you draw fib retracements in a certain way, okay? So the idea is that if you're thinking about making certain trading decisions, then you kind of want to wait until you get the alignments properly in the high probability areas before actually trading from them. All right, give me another one. Anybody have something they're looking at right now? Good. All right, Art, how you doing? FXI, good. Yeah, David, the fib tools that we use are exactly generic across all the charting platforms. The only difference is that we set the high probability areas, all right, for the fib extensions. Because when you load a fib extension, it will give you many of the fibs, but the high probability ones are between a certain percentage. And again, that's all in the course. All right, so Art, let's see, what are we looking at here? Okay, so here's what I see on this. Bearishness. What are you thinking about doing on it? And do you have a position? Okay, good. All right, so yeah, it's not time to go long yet. And the reason for that is a variety of reasons. Bearish pyramid are all actives on all time frames. So the stops for short positions are across the board, all there. So you don't want to go against an active bearish pyramid for a long trade, right? In addition, we still have red here. We still have red here, 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 and here. So we don't have a low yet in here. We don't have a bottom in yet. So you got to wait. Now, when those things are no longer red, then you've got a chance to possibly have a bottom, and we can look at it again then. So you just kind of put this on a watch list for now and see when this thing will bottom out. But definitely coming down for right now. It's too late to go short too. Okay, the short positions were quite a while ago, especially if you were trading like the 60-minute chart. And you got some other pyramids coming down here. So kind of wait on that one. All right. Patrick, hello there. Okay, PANL. And you are long on this one. And long you should be. And hopefully you were long for a while. Okay, nice one. So let's just take a look at this one real quick. All right. So you have green across the board. I see no red currently. No red here, no red here, a little bit down here, but no red here. Okay, so you're in good shape on this. Stop should be here on the pyramid, around 450. I don't know where you got in. Let's just take a look and see if the Elliott wave count on this makes some type of sense here. So let's first see where our fib retracement is. All right, so step one on this is we hit the wave 4 target zone. This is the high probability 4 target zone. So 3, 4. Now we're currently in a wave 3, it looks like, in a wave 5, because the overall count is a wave 5. All right, so you got a 3 here. See, here's the overall count, 3. Here's your 4. You got to have a red owl in the longer time frame, and 5. So you're in a 3, 4, 5. So if we go and look inside that, we're inside of 3, inside of 5. That's what this is telling us. So in a case like this, being long is good. Let's see where the target zone is. Where did you get in, if I may ask? So we're going to erase this. Notice here, David, this is for you. Start of the trend. 1, rather. Oops. Let me erase that. 1, 2, start, 3. So the fibs retracements are drawn on 2 and 3. And then this is a 70% high probability zone. Okay. So you got that. Now we're going to erase this because that satisfied a bottom. So if you were trading off the bottom, you reach there and you would wait for green to come in. All right. So now we want to take a look and see where the target zone is. We're going to go back here. 2, 3, 4. So we're getting pretty close to that target range, okay? So you got her in around 450, all right? So there you have it. So you don't want to have your stop too close because you got a lot of green down here, all right? Check this out. You got green here and green here. So there's a 75% probability. This is the beautiful thing about this indicator, that we're going above the highest high in that green area, which is here. So you're going to be in the target zone here and here. You're definitely going to probably get in there. I can't say definitely because nothing's definite in the markets, but there is a strong probability you will go back into that target zone. So you don't want to move your stops or scale out really. You kind of want to just hang tight. Now, when you get into the target zone, you know, that is an area where when you get in there, you can start, you know, ratcheting your stops up, scaling out, and so forth. Don't forget, when you get higher, you might see this turn yellow. You may see this start to turn yellow. That's when you can start to scale out or, you know, ratchet your stops up real close. But it's looking good. Art, my pleasure. Yeah, not yet. You might have to wait a little bit longer than a week, honestly, on that, Art, because that might take a little while to get worked out. All right, Patrick, is that good? I feel pretty confident about keeping that that position in. Don't have your stop too close because you may get a pullback. Or you could get a pullback like this before it heads up. So make sure your stops are not too close at this point, not with green PTFs. All right, how about another one? Because this also creates a great learning environment. You kind of see how to connect all the dots. Good trading is all about sticking to your rules and connecting the dots that the software is tools. They aren't the end all, but they are tools. And you have to have the right tools to trade the markets correctly. And so then you have to have a rule base built around your tools. And once you have that, then you can apply your tools on any market in any time frame. And that's what you're seeing me do here. And so a lot of you, of course, have the art software already that are watching this. But if you're, you know, watching this and you might be on YouTube and you don't have them, this is how we connect the dots on the tools. And this is, you know, we have this free session every week in order to help you all learn how to connect the dots. That's kind of what it's all about. All right, anything else? Going once, going twice. All right, so that is good for today, I think. I think we covered some really good, important things today. And I appreciate everybody coming today and watching. And we'll be back here next week. So if you have any questions that come up between now and next week, just write them down and you can bring them, okay? Let's see, Art, good stuff as always. Well, thank you, Art, all right? It's because you're here, all right, and asking the questions. That's what makes it good. You can always pick up a little something, right? All right. Yes, David, the Elliott Wave Home Study course will have all that in it. Right, nuggets along the way, that's right. Oh, my pleasure. David, thank you for coming, all right? And are you coming on Friday to the YouTube session? I don't know if you can make it on Fridays, but if you can, we can look up BTC USD, okay? Yeah, all right. Yeah, Fridays are good. Kind of like this. We don't go into as much detail because we're trying to get through as many stocks as we can on Friday. But the nice thing about Friday in that format is you'll pick up probably one or two good stocks for yourself. So it's almost like a stock picking service. Oh, it's not, that's okay, David. I don't mind doing it. If I know you're going to be here, I'll be glad to do it. All right, anything else? Now, maybe next week what we can do is look at the simulator on NinjaTrader because it's similar to probably a simulator they have on just about all the platforms now. But the nice thing about the NinjaTrader one is it puts the stops and the entries right on your charts. And for those of you learning how to connect the dots, the simulation trading is tremendous because if you treat it like real money, all right, you'll get a good idea of how you're doing. And you'll also be able to actually have experience in a real live unfolding market of how you handle stuff. And you may have a gap in your rules. You may find, oh boy, you know, this happened and I really wasn't prepared for this and my rules weren't prepared for this. So then you add something in there to fix that. And that's how you cover all the bases So when it's time to go in with real money, you got it nailed. All right, you will have to work on your psychology. Nice thing, if you take simulated trading really, really seriously and keep good records, and I would suggest, believe it or not, once you have a set of rules you're testing, is show your results on a weekly basis to somebody you care about. So you put a little pressure on yourself to do well. And then what that pressure is going to do is force you to do your best. It will also force you to deal with your psychology that will come into play when you're trying to really have something behind it. You know what I'm saying? If you are lackadaisical and you don't really care about your results because it's simulated, then you may not feel the same pull on fear and greed that you would feel as if you have something on the line. So if you're showing your results to somebody you care about, and you kind of want to show them that you're doing good, you're going to have now that little bit of extra oomph that could trigger some fear and greed events in order for you to show profits instead of letting necessarily your system play out for even more profits, if you know what I mean. Okay, so think about that. All right, I think that's kind of important because that's how you learn. All right, let's see what I got here. Let me see here, hold on. So Patrick, you want to look at the Russell. Let me see what I got in terms of data for that one. I got the Russell, what's that, the M2, I think. So we come down here. What contract month? Okay, 03. All right, let me see if I have RTY 0322. I don't think I do on that. Let's see if that one loads. Yeah, I guess I do. All right, so there it is. There's the 5 minute. I can change that to a 15. Okay. So let me do that. If you want to look at that one, right? Okay, what's your question? Fibs on a 1 minute chart for a short? Okay, so you're looking to do a PTF trade off the 5 probably, right? All right, well, you've had a big move up, right? All the way up, kind of volatile. So I would say on this one, if you wanted to do just a fib retracement, grab here, always find the start, okay? Then one up, one down. This is lower. See, this is the lowest pullback in this move up. So we want to go here, all the way up here. So your fib retracement is there. So around 1998 to 1992, if the trend continues. Now you could also wait for this thing to end and then take a PTF trade all the way down here on this time frame. That's the 15 minute though. If it changes to the 5, I don't think it's going to be any different from what I saw before. Yeah. Okay. All right. So that's kind of where I was looking at if you're trading the 1 minute. Was that good? Well, if you look at the 1 minute here, again, the emphasis I was trying to do here is that I'm taking this trend as it's beginning here. Okay, so this is point 0. This is where this big move really started, right? Okay, so that's 0. All right, 1, 2, 3. So you want to anchor it here and here. The reason this is not a 2 here is because this went lower. Okay, wave 2's got to be the lowest low in the beginning of that uptrend. You know what I'm saying? Okay, so that's the way I would draw that one. All right, well, that's it. Thanks everybody for tuning in, and we'll see you back here next Wednesday for Wednesday Live client support. And I hope this is helping you all. Do you like this format? Is it working for you? Great. Excellent. And remember, there's no such thing as a bad question. Okay, there's really not. Because if you have the question, chances are 6 other people. Isn't that what they say? 6 other people have the same question. So there you have it. Yeah, we'll see you, Patrick. I'll see you tomorrow in the day trading room for sure. Now, I'm also getting a question on my hat. All right, so my hat here this week, you know, every week I wear a different hat. This one I actually got when I was in the Navy, and I got this in the Philippines. You know, in the Philippines, they'll put just about anything you want to say on the hat. So back then I was in my early 20s, and I thought the saying was kind of cool. So either lead, follow, or get the hell out of my way. So I put this on a hat, for God's sakes. And I found it in my memorabilia storage box. So I said, okay, I got to wear that one, that kind of thing. All right. So there you have it. All right, David, you have a question? I don't think they have yet. Okay, I don't think they have on that. Because if you look here, for example, on GBTC, if we go to, where am I here? Kryptos. Oh, we're already on Kryptos. Okay, so if I go to GBTC here, all right, so on this case here, on this move up here, this would be 1, 2, and here we are here and on up. So I think we're okay on that one. Plus we have a green PTF. So I think we're good on those. Okay, I think you'll be all right. Well, the BTC USD will be a little different, but it shouldn't be too much different. Okay, should be kind of the same. We'll look at that on Friday. Okay, we'll take another look at it. So try to be there on Friday. Okay. All right, so I think that's it. All right, thank you, everybody. Have a great week. Always use risk control, really important. And we'll see you back here next time.
Serving traders worldwide since 1998, TradersCoach.com provides educational services for traders and investors alike. We've developed trading software to help traders of every level improve their skills. Our site is dedicated to providing you with all the resources, software, and educational material you need to achieve your trading goals. It is because of our years of experience, attention to detail, and our exceptional customer service that TradersCoach.com is the right choice for you. Call us today.